Welcome to Gold Weekly number 3. The action in the gold market this week was not really surprising in view of the announcement from the Fed. Everybody's waiting for the Fed. The week before, we saw the gold price going along its normal pattern of higher lows and higher highs. But it was stopped out at 1290. That was too hard to break through. And that 1300 to 1320 barrier is still very strong overhead resistance. But if it breaks through that, then it will rocket forward. And so the attention of the market was on not just the gold price, but the gold price in dollars. In the euro, it's very much more volatile because of the movement of the dollar. But the critical thing is that US investors stood back from the physical gold market, and they really did not very much at all, 5 tons or so. But then immediately after the Fed announcement, 12 tons hit the market, and that knocked the price back from its higher levels to the current level of about 1253. The prospects for interest rates later in the year, it's clear that the Fed will continue along its tightening pattern. Indeed, it's going to start adjusting its balance sheet towards year end if the US economy continues along its broad, expansive, moderately expensive path. And that will affect interest rates worldwide. But will it affect the gold price if it continues along that road? We don't think so. We think it's discounting that now. And the fact that it's discounting it above support tells us that this critical pattern that's been building up over the last few months is now at a point where the 50-day average is through the 200-day average, making that critical cross, and it is still pointing higher, can you believe, even after the Fed moved once again. From this time on in the gold year, we see financial factors coming into play. Indeed, the highest point, the peak price for gold, was in this quiet season, around about July. And why do I call it the quiet season? Because the physical gold market, as we've said before, is dominated by Asian demand. In India, 70% of gold demand was historically bought by farmers. So they still are the major influence at the time, despite urbanization, which is chipping away at this seasonal feature. But they, very fortunately, have had a wonderful start to their monsoon. They're planting the crops right now. The monsoon is spreading across the whole country, so they're looking forward to a bumper crop. And that comes in around about August, with them dealing in the gold market from around about September onwards into the festival season. And their demand, I personally feel, is going to be very high. What is often excluded is the smuggled gold into India. And the Indians love smuggling gold. If you've had dealings with them, you know they'd like to deal in cash. Everything hidden out of sight of authorities or people who might interfere with them. And if you add that smuggled gold to official demand, we're looking at, I think, 4 figures, over 1,000 tons. Now let's move further east into China. What's happening there? Demand continues strong. Why? Because the Chinese economy continues to grow. It's encompassing more and more middle-class people, and they prefer to buy gold. They still see it, as they've done in the past, as a source of solid, safe financial security. They don't buy on the rise. They like to buy at prices which are still moderately low, so they don't run with the market as the US investors do. They go in when it's pretty sound. But as this middle class builds, so new participants are coming in, the old participants are buying more and more gold, and so their demand continues to rise. We're told that Hong Kong expects 1,000 tons of gold through that port of entry, and that represents plus minus 30% increase in demand. Well, we don't think we'll hit record demand in China, but we do know that we're getting pretty close to it. And these two combined are taking off nearly all, if not all, newly mined gold. So that remains a pivotal factor people will say, well, why is the Chinese price always so much higher than the London, New York price? Well, $5 of it is accounted for the difference in the quality of gold that's priced. In China, they deal in 0.999 out of 1 quality gold. In London, it's 0.995 fineness per ounce. And that, as I said, accounts for $5. Next week, we'll tell you more about the difference between the markets and where they're headed. So we'll say goodbye for now and wish you a successful week in the gold markets. Enjoy yourselves.